The Morning Drive is sponsored by Power Metallic. To find out more about the company, please visit their website at powermetallic.com. Follow the Money Investor Group is a 100% Indigenous-owned company and certified with the Canadian Council for Aboriginal Business.
Peter Schiff.
Hey.
And Peter's entourage.
G'day, Mark. Nice to meet you, mate.
Nice to meet you.
Yeah, Mark's at Europe Pacific Asset Management. I appreciate the airport pickup.
Well, that's what we do around here, Peter.
Yeah, well.
Welcome to the Morning Drive for a second time. Last time was in Vancouver.
Oh, we did it in Vancouver last time.
That's right.
That was a while ago then.
I took you to get some podcast stuff, actually.
All right.
Yeah. Okay, so I was thinking, what can I ask Peter right off the top? And I'm like, wow, this is the most important thing I got here. What happened to the Blue Jays?
I don't know.
You're a big sports guy, so I know you're watching that game.
I was watching that game, and I was pulling for the Blue Jays. I mean, the Dodgers, they won last year, and I was a Dodger fan when I lived in LA. But I mean, I would have liked to have seen the Blue Jays win, just because I always root for the underdogs.
Yeah.
So I don't know. I mean, it looked like they were going to win. I mean, I thought they probably should have won that game, but the Dodgers have got the big deep pockets.
Yeah.
It's hard to beat them. I was joking on my podcast that Trump was going to have to put a tariff on the Blue Jays.
Yeah, I heard that.
But then again, we got a lot of Japanese players on the Dodgers, so I don't know how he feels about that. Maybe we need to tariff the Dodgers for hiring Japanese pitchers.
This from a baseball fan's perspective, it really was a fun series. That game just had a lot of entertainment in it.
Well, I think the most entertaining part was after the pitcher hit the batter, and I forget who got hit, but the very next batter hit the pitcher.
I know, he shot. It was like a slow pitch thing.
It was just hysterical.
Yeah, that was Springer.
Because right after everybody came rushing onto the field, it was a big deal about it. The remarks that changed.
Yeah.
And then he comes right out and just hits him right in the leg.
So it was Jimenez that almost got hit, but you saw the replay. It looked like he went to try to get hit, and then it seemed like the pitcher lost his frame and said, "You know what? You want to get hit? Here, I'll just plunk you." Right? And then Springer comes up and shoots box on him and hits him in the shin. It was great. All right. So other than that, I think there was $30 billion of money that was just printed over the weekend. What do you think about that?
How do you know it was 30 billion?
I don't know. That's what all your crypto friends are saying. Yeah,
well, don't put much stock in what they say. Okay. But I'm sure there's a lot of money being printed pretty much every weekend. That's par for the course when you're running $1 trillion deficits the way we are, and the whole economy is based on inflation. Just keep creating more and more of it and hope that people believe that the illusion of growth is real. But clearly the public isn't buying it. I mean, that's why Trump's approval ratings are at a record low when it comes to the economy. I mean, he's going around the world talking about how the economy is booming like it's never boomed before. We got the strongest economy in history. We got the hottest economy in the world. Meanwhile, his economic approval rankings are tanking because people have to live in the real economy. They don't live in the fantasy economy in Trump's mind.
Yeah. Well, the emperors have loved to use fiat currencies to sort of debase the dollar, and then there's taxation. Because I love what you're doing with gold. I understand exactly what you're trying to do, but how do we get the emperors on board?
What do you mean?
Well, I mean, how do we get the people that control the money system off of fiat and onto gold?
Well, I mean, they're not going to want to do that. Because the reason that we went off the gold standard in the first place is because politicians don't want to be limited by the restraints that gold puts on them. They have to be honest. They can't lie to the public, and they have to, let them know that there's no free lunch, that if they want a particular program or some benefits, that they have to be paid for. But on the fiat system, politicians can make all sorts of promises to get votes without the voters realizing that they have to pick up the bill, because in order to pay for all the benefits, they just create money out of thin air. And the result is that prices that might have otherwise gone down because of capitalism end up going up instead because of inflation. But the public doesn't necessarily make the connection between the rising cost of living and the deficit spending. And of course, the government and Wall Street and academia help perpetuate the lack of understanding by misdefining inflation as rising prices, and then enabling the government to blame the rising prices on the companies that are raising the prices, rather than the government that is debasing the money that is the reason that prices are going up. So I don't see any will on, in the US or, anywhere else, for politicians to give up the power that comes with that printing press, and to willingly, go and accept the discipline of gold. But I think individuals on their own can, opt out of the fiat standard and use real money as often as they can. And I think that what's happening now, with the internet or with blockchain or all sorts of technology that can move gold into the 21st century and make it a lot easier for people to use gold as money, even if the government does not, right? The government could create whatever it wants, but the public could use.
They have the choice.
Yeah, just like, look, I can, buy a postage stamp and I can send something through the mail, or I can email, or if I want to ship something physically, I can call FedEx, right? I don't have to use the post office. We were just here at the airport. Some of my, friends or associates, they didn't call a cab, they called an Uber, right? A cab is, regulated by a local government. You have a license, it's very much controlled. Uber is a lot more free market, right? People have an alternative.
Like Airbnb.
Yeah, right. Although there's not that much government, let's say, involved in hotels, but yeah, people are renting from private parties. But I think that with money, and that's something that I'm also, trying to be a part of with what I'm doing now at Schiff Gold, and what I'm going to be building out at Schiff Gold, is making it more convenient for people to not just hold gold as a store of value, but to use it in everyday transactions instead of using dollars, and instead of using banks, they use gold. And they don't need a bank, because banks today don't even really pay you interest. So all banks do is they hold on to your money, and then they provide a platform for you to use it to, pay your bills and to receive payment from others. But you could do that without a bank. You could do that without, becoming a creditor of basically an insolvent financial institution that counts on government protection to keep it from, imploding. You can just have your own gold sitting in a vault in your name, yet it's immediately accessible to you for payments to send to others or to receive payments from others. And so people can transact and do everything they could with dollars, only do it with gold. And so the benefit there is that between the time you earn your money and the time you spend it, it doesn't lose any value. That's the problem with the fiat money that we have now, is that you earn money, and then if you don't spend it immediately, if you spend it a year later or 2 years later, things cost more. But if you earn gold, and then you save your gold, and then in the future you use your gold to buy things, things will cost less.
All right, Peter. So we kind of covered the, transacting in gold a little bit. You want to talk kind of about the stablecoin?
Coin backed by gold. I know CZ posted that, that doesn't work because you have to trust a third party to hold your gold. And of course, I thought that was a bit hypocritical coming from somebody who has an exchange where you have to trust the exchange. You have to deposit your crypto with a third party, in order to be on Binance. But also, the biggest thing now within the crypto industry are stablecoins. And that's what's driving a lot of the capital flows into the crypto industry, and of course into Bitcoin too. And tokenized gold is the exact same concept as a stable coin, where in a stable coin you trust a third party to hold your dollars. The dollars stay in the account of a third party, and you transact in tokens that represent claims to those dollars. And so if you're going to say that having a gold-backed stable coin is no good because you have to trust a third party, well, then the same would apply to any stable coin, right? Tether is no good because you have to trust Tether to hold your dollars. But there's a big difference too that favors the consumer, because Tether can take those dollars and buy treasuries and earn interest, yet none of the holders of Tether get any of that interest. So Tether keeps all the interest. But when a company is holding your gold, they're not taking your interest because there's no interest on gold. So by holding a stable coin backed by gold, you don't give up any of your interest. But when somebody holds a stable coin backed by dollars, they are giving up all their interest income that they otherwise would have earned to the stable coin issuer. So with tokenized gold, you don't give that up. In fact, normally you have to pay money to store your gold. And so here with it, you're getting storage maybe for free. So it's a much better deal. Plus, of course, the whole concept of stability in a stable coin really doesn't exist when you're tokenizing dollars. Yes, the stable coin and the dollar are stable with each other, but there's no real stability because the dollar itself is losing value every year. So if you have tokenized dollars, you are going to lose to inflation the longer you hold those tokens. But if you have tokenized gold, real gold as tokenized, then you have actual stability because the stability lies in the gold. And over time, gold's purchasing power is stable, a lot more stable than the dollars. And so if you want true stability in a token that has backing, as opposed to Bitcoin, which is a token that has no backing, why back your token with dollars when you can back it with gold? And that's the point that I'm making. In fact, I'm probably going to be debating that very point with CZ, sometime, most likely in December, because I might do it at his conference in Dubai. But if I don't do it there, hopefully we'll do it someplace.
So there's kind of this fight for market share between Bitcoiners, crypto people, and gold. Because when I talk to Bitcoiners, a lot of their fundamentals for owning Bitcoin are very similar to gold. So it's a kind of a fight for market share.
Well, they're not just similar. In many cases, they're identical.
They're identical.
I mean, it's the same story that you can't trust the dollar. They're creating too many dollars, inflation, central banks, fiat money, deficits, dollar crisis, de-dollarization. All of the arguments that are made to support gold, they use the exact same arguments to support Bitcoin because, again, they are representing Bitcoin as a digital version of gold. And so if it's digital gold, then it should be the same as gold with respect to why you would own it. Supposedly, it's just a more convenient, more modern way to own gold. And of course, that's not true. That's the whole fraud about Bitcoin, is that it's not digital gold. It's digital, but it's certainly not gold.
Yeah.
And so I think people that are really concerned about the macro, financial picture, about dollar debasement and inflation and the Fed, if they're buying Bitcoin, I think they're making a mistake. It's a very different trade than gold. There's really no correlation between gold and Bitcoin, which if it was digital gold, they should be positively correlated. Bitcoin is much more closely correlated with tech stocks, tech stocks that don't make money, right? Highly speculative stocks. Although even there, some of that correlation has been breaking down.
Yeah, which is
because
fascinating.
Recently, tech stocks have been making new highs and Bitcoin is drifting lower. So it doesn't seem that it's really correlated with anything, which some people think makes it non-correlated, and they think somehow that gives it value. But I think eventually it's going to collapse because I don't think it has any real value backing it up. I think it's just all a bunch of hype. And the fact that it's digital gold, that's just a meme. right? And all Bitcoin is a meme coin. And the meme is that it's digital gold. But the truth is, it's no more digital gold than a photograph of a hamburger is digital food, right?
Okay, so if you look at your audience, you have a massive following, lots of subscribers. I think you're in the millions. I think, I don't know, you would know.
Well, I'm not, and what, on X? On
If you
YouTube?
combined everything.
Yeah, well, a lot of them, so there's a lot of overlap there. But yeah, but certainly, I have, over 1.2 million X followers, but I've got quite a few people on YouTube. I think about 600,000 people. But yeah, I'm sure that my total following might be over 2 million, but it's hard to say.
If I was looking at a pie chart, guys, if you don't know the answer to this, and I'll even ask you, if you think about U.S. retail capital, investment capital, of the entire amount of capital that's available in the U.S., how much do you think retail capital would take up of the entire thing? What would the pie chart look like?
I don't know. Retail investors in the U.S.?
Yep, U.S. retail investors.
I don't know, but where are we?
We're about to make a left here.
Oh,
Yeah.
Retail as opposed to what, institutional?
Yeah.
I don't know. I think overall it's probably a decent percentage of, you add up all the retail investors, all the high net worth investors, as opposed to pension funds and hedge funds and endowments. But
well, the reason I asked that was I was watching the Blue Jay game yesterday, and I met up with the CEO of Empress Royalties, a royalty company, and she had a large shareholder beside her, and he has a lot to do with, he knows a lot about U.S. retail investors. So I said, do you think U.S. retail investors are in gold? And he said no.
I agree with that. Very little.
So then how do we get those people into not just gold stocks? Obviously that'd be great, but what you're talking about.
Yeah.
That's what has to happen here. So how do we get to that point? Because it's great what you're talking about. How do we make it happen?
Yeah, well, I'm doing my best to try to raise awareness of gold and raise awareness of fiat currency and why people should buy it instead of gold. But, there are a lot sexier stories out there. Bitcoin promoters did a good job of hyping up the dream of instant wealth by buying Bitcoin. And, they took a lot of the gold talking points and wrapped it up in that Bitcoin bow and got a lot of young people to buy into Bitcoin. So they just need to, move to gold. Hopefully, they, after they lose a bunch of money on Bitcoin, they're not completely soured on gold. That Bitcoin doesn't end up tarnishing gold as a result of the money that people are going to lose in Bitcoin. But over time, Americans will figure it out. Part of it too was, the ease that you can make money in tech stocks and internet stocks, and I think when the air comes out of that bubble, people will look for safer alternatives, and gold will obviously stand out because gold's going to keep rising even if all these other assets collapse.
Yeah. Okay. So
and it's not so much gold rising; it's simply the dollar losing value, and so more and more dollars are required to buy the same amount of gold.
We're almost at your destination here. So final word, whatever's on your mind, Peter, whatever you want to say.
Well, hope you enjoy the conference here in New Orleans. The weather's a little warmer than the last time we met in Vancouver.
Yes.
That's why the camera fried out for a while in the heat of the New Orleans sun.
Yeah, well, I figured what it is. You know what? I usually have my case on the back.
Oh, that's why you don't have the case.
Yeah, because I've been in hot climates before. I never had an issue.
Yeah, and it's not actually that hot, but it's like you're in an oven when you're right up into the windshield. The sun is just bearing down. But it should be an interesting conference because gold is a lot higher than it was a year ago.
Yep.
The gold stocks are a lot higher. The mood has been kind of somber. I've been coming to this conference for decades now, and gold has taken a back seat to Bitcoin for the last 10 years. Probably very frustrating to a lot of tried and true gold bugs. This conference is full of boomers, right, and all the old fuddy-duddies that supposedly don't get it. We're getting a little bit of the revenge now with gold going up and Bitcoin in a bear market versus gold. But I think by the time I come back here next year, gold could be a lot higher. Gold could easily be well over 5,000, and Bitcoin could be substantially
below 100,000. I mean, who knows? I think it could be a lot below, but we'll see. But I think the bloom is coming off that tulip.
Are you going to VRIC again? Vancouver?
I might. I'm thinking about it. They're trying to get me out there. You know, they've been trying to get me the last few years. It's a long flight from Puerto Rico, so I've always, I haven't done it recently. And they always hold it on the weekend of the conference championship games. And, I always like to watch those games, and having to watch them in the hotel, in Vancouver is never the greatest. I remember one time I was on a panel and I had the game on. I had my TV, I had my iPhone and on the podium, and I was like watching the game, while I was on my panel.
I'm just going to do a little loop here while I say bye.
All right. Yeah, you can do one loop.
All right. Well, thank you very much for doing this. Hopefully the conference goes well. It's very exciting times right now if you're into gold, which I am, and everybody else in this vehicle is. It's fascinating, fascinating times. And hopefully some Bitcoiners decide, instead of, maybe I'll sell my Bitcoin.
That's what they should do. We've made it easy at Schiff Gold to convert gold into Bitcoin because we partnered with BitPay. We were almost one of their first customers to help people turn their Bitcoin into real gold. But if people are interested in gold mining stocks, I've got a great fund that Adrian Day, who was in the car ahead of us, he flew in with us.
Yeah.
He manages our gold fund, the Euro Pacific Gold Fund, that we have separately managed accounts too. If you'd rather have a portfolio of stocks managed individually by our team, led by Adrian at Euro Pacific Asset Management, then you can go to europac.com.
Yeah.
And
Adrian's been there a long time.
Adrian's been doing this a long time. I mean, he started managing my fund about 10 years ago, but he's been in this business for like 40 years.
Yeah.
And nobody knows the industry like Adrian. I mean,
I was just grilling him on the flight over. He knew the miners inside and out.
Yeah. He's forgotten more about the miners than most of these portfolio managers know. That's what I think. I think the real long-term advantage of our gold fund is that he knows the stocks not to own and then the small ones to own, because avoiding the landmines is maybe even more important than finding the real gold mines when it comes to the exploration space. And that's where the performance is really going to stand out. Anybody can make money just buying the big mining companies that have huge reserves, that have been around. Yeah, they're all going to go way up. But to really get the outperformance, you got to find the small ones that are going to explode.
That's right.
And that's what Adrian can do.
Okay, guys.
All right. Thanks a lot.
Thanks. All right, take care.